There we go. We have seen every shape, form of scam that's out there. And unfortunately, over time, what's happened is that we have been limited in terms of our success because we feel that we can't really go from where we are to where we want to be because unfortunately there are too many people out there that can't be trusted. Well, the whole goal is with Core 4 is to help us to figure out how to identify legitimate opportunities over time and make sure that we can test them. So for my journey, I will tell you that it's been really kind of miraculous. It's had its highs and it's had its lows, but for the most part, it's had more lows than highs. And what does that mean for me? That means that I've lost money, I've made money, I've lost more than I've made. And so I've determined that the best way for me to get to the next level is to do what? Is to identify self custody opportunities where the things that I'm looking for the most in my life for my family, I know that I can actually attain those things or at least take the risk to attain those things because the money that I'm putting in, I'm still in control over it. Whether it goes up, whether it goes down, whether it goes sideways. And so we have a team of people. And so some of them are not going to be able to join us tonight, but we have a team of people. Oh, wait a second. Um, Hold on one second, team. So, guys, I'm really, really sorry about this, but we do have some teammates that are trying to get in, and I need to make sure that your team can see you. And I'm not sure what has happened, but apparently they're trying to get in and they needed some help. So thank you guys for letting me try to send that over to them. So let's go back. So self custody of funds. And what does that look like? Self custody is where the money that you make, that you earn, instead of you giving it to another entity in order for you to um, grow your capital, you actually make sure that you hold it and that you find another tool or another way or another resource to basically create the value. And unfortunately, for a lot of us, we have tried things and they just haven't worked. So, for example, I've tried investment strategies. I've tried Forex before. I've tried um, all sorts of stuff. Real estate. I've tried. Um, let's see, pagers. I've tried construction. Different things that don't have to be scams, but I've made investments in those, and so those real world investments turned out to be pretty good, and some of them turned out to be pretty bad. So over time, what I realized is that if I'm going to make a big difference in the world, the way that I want to make the difference for my family is through only self custody. Same money that I put in time that I put into, say, construction. What if I would have put it into the way that we're running Core 4? It just would be totally different for me and my family. And so we have a couple of products that we're going to be showing you guys over the next few weeks. And so those products are basically designed to really help you to see with getting from where you are to where you want to be with a self custody in mind. You won't have to worry about whether or not the money is just going to rug pull. We don't believe in that. It's very difficult. And even if I were to do one or two or whatever else, it would be very difficult for me to share it with anyone else because at the end of the day, the goal is not um, to have anyone else suffer from a loss the way that we have lost, in the past. So anyway, so we have an exciting show. So the reason why it's exciting is because we have real life products that are going to make an impact in your life. So without further ado, today we're going to have a modified show. We have Chris Pulver, who's joining us. James Bishop is not able to make it today. Eric Majors is on the road, and so it's summertime, so we have to make sure that we allow people. I'm going out of town and all the rest of the stuff. So this is the time to spend with our families, but this is also the time to know that our money is still going to be able to grow with or without any problems. So without further ado, let me bring on my good friend, Chris Pulver. Hey, buddy.
Hey, Brandon. Hey, this weird link. I got this on my phone, not my computer. So there's some stuff I wanted to share. I've got screen share ready to go, but I'm on my phone right now for this connection.
I email you as you just start to tune up. I'm going to try to email it to you.
Okay.
So you can have it.
Sure.
All right.
Okay. I'll start and I'll look for the email so I can do a little screen share to wrap up my session. I know I'm basically speaking for myself and James tonight. So a couple of things. We are sitting right around that same, 30 to 31 all-time highs in the S&P, roughly the same for the NASDAQ year-to-date performance. The S&P is up 14.48%. Sectors that are leading the way, pretty typical. We've seen this a lot in the U.S. the last few years. Communication services, technology, those are your big household names. That's your Metas, your Netflix, your Googles. NVIDIA, of course, is up there. Tech is going to be super microcomputers, NVIDIA. Micron had a fall last week. But, we talked about this the last Core 4 session. It's highly concentrated, which is a little bit concerning. And so I wanted to actually show what I'm looking at technically on the charts. I mean, we are going into a really interesting week. This could be a bit of a spicy setup with some Wednesday, Friday news. It's 4th of July on Thursday. And so we came up and we poked a level last Friday. And this trade worked out great. I was long all week on the SPY with a call option at 548. And we went up and actually poked 550. So it worked out really well where I bought the call on Wednesday, 548. We gapped higher on Friday morning, rallied up through 548, got into 549, ended up peaking out right at the same highs around 550. I turned about a 64-cent debit into about a $2 credit, so about a 300% gain on that position. Also last week, since we had our Core 4 show, I've been doing some deep dives in some of my Streamwise capital strategies. Look, I've been trading for a long time. I've been a passive investor since 2000. I've been an active full-time trader since 2010. And looking to see, if all I did in my trading, if all I did for my clients for the last, 15 years was these strategies that I do right now, what's my overall performance? And so I had some fun doing that because it just validates what I do. I see your link here, Brandon. Okay. So let me jump in here. If that's the case, then I'll go ahead and mute on the computer and I'll switch over. Let's jump in here. All right. One second. Okay. Quick check. AV check, everybody. We good? And then I'll share the screen here, Brandon.
Yep, we're good.
All
sure.
Right, perfect. Thank you. Okay, so this is what I was mentioning last week. Really, it was a very quiet week. The week ended up finishing red with a very volatile end of month, end of quarter, which was Friday the 28th. So Monday, nothing. Tuesday, nothing. Wednesday, nothing. Thursday, nothing. Friday, gap, retest the high, in a very violent day. 550 and change all the way down here to 543. That's a $7 move in a given day, which is a massive move. That's almost a two standard deviation, or roughly like a 2x move on the day, just in volatility alone. Now you look at this and you're like, well, we poked all-time highs. It's true, we did, but we faded hard off of that. And so I go to this chart, and technically on the SPY, this is what I'm looking for. I do think that we have, a potential correction that is going to pull us back into the CPI gap. I am playing that out to the end of July. And so, I'm still somewhat bullish in the portfolio. I've gone a lot more non-correlated. I've also started to put in some hedges where I'm playing the SPY both ways, the Qs both ways. And I'm also, doing some non-correlated US trades as well. I also trade gold. I trade silver. I trade copper. I trade oil. So I'm looking to see if I can generate some non-correlated income because, yes, the market has been going up and it's been easy to participate. We've been in a bull market since October of last year. and it has been pretty simple. But there's going to be some probable corrections. I would say possibly some pullbacks, and maybe the first half of the year getting up, 14 to 15% might prove to be a lot more difficult moving forward. Another thing that may have put a little dent in the Bulls' momentum would have been the reality that perhaps we have a new president and a new administration coming in January of 2025. I don't know if anybody watched the debate last week. I tuned in for about 3 minutes and I couldn't watch it anymore. But I'm not here to get political. I don't trade politics. I trade policy. But the point is, I think there's going to be some disruption on Capitol Hill. And if that is the case, the market's going to have to figure out whether that's good or bad. Of course, we want to know what the Fed's going to do come September, if the market's going to get a rate cut just for fun, or the Fed's going to try to make good on the fact that they went from 7 cuts down to maybe 1 or 2. And during a period where at all-time highs, where the labor market is softening, it does mean that things are going to be really important to watch over the next couple months. So I think the runway right now is either we have a bit of a correction for July and the market continues to trend higher. This would be a perfect time to do it. Would be this week's trading, because data-wise, we have some elections going on in France, elections going on in UK. We obviously have the debates, everything starting up here in the US. But this news week, like I said, we're disrupted on Thursday with the 4th of July for the US, but we do have UK elections. And then on Friday, you go from a holiday day on Thursday to Friday's non-farm payroll. Most of the time on a Friday, July 5th, right after a major holiday, I would say most people aren't really watching, which would make sense. Like, take a long weekend, enjoy the long weekend. But the reality is there's enough news on Friday that we could see a bit of a surprise move one way or the other. So, perhaps that surprise is path of least resistance, where the market finds a way to grind higher, or that could be a quick dump to the downside. And then we'll see if the market wants to go ahead and buy that dip coming into, post 4th of July weekend. So I am, like I said, playing it both ways through the end of July. So I'm long and short the SPY. I'm long and short the Qs. I'm long on the DIA, which has been beat up through the June correction. I'm long on the Russell, which has been sideways pretty much all year. So anyway, a lot of stuff I'm trading as usual, but good stuff. So I wanted to share a couple things really quickly. And this is just, like I said, I had some fun going back to trade some of the core strategies that I've deployed over the years. And, one of my favorite ones has about a 96 to 99% win rate. If I did this every year, all the time, this annualizes about 7+% for my accounts. This trade here, this is a bi-directional trade, which means I don't have to pick a direction. It's just a very mechanical trade. Week in, week out, a month in, month out, generates about 8.1% a year. And then we have this one here, which is a split spread. This is taking advantage of some price action, some extrinsic value in options trading, as well as the slight bullish bias that the market has baked in. My win percentage about 63 to 67%, depending on the SPYs and the Qs. But you can see here, pretty good gains at 12% a year. So if this is all I did for the time that I've been a trader and managing money, 7%, 8%, 12%, you're looking at around, 27% a year, give or take, with just a mechanical approach to trading. So is it that easy? Well, I mean, for the last 16 to 17 years of trading, it has been that easy. It doesn't have to be complicated. One thing I think a lot of traders do is they complicate things. Trading does not have to be complicated. In fact, what you end up doing when you're a trader is you end up learning and learning and learning. You try to get out of this stage of I need to soak in all this information that I possibly can. But when it becomes, when you're really trading full time, it's not about all of this vast knowledge and just in consuming as much knowledge as you can. I'm not disagreeing with education, but I'm saying that once you learn all this stuff, you can't actually apply all this stuff. So what you end up doing is you find what works, you find what keeps you comfortable, you find what keeps you disciplined and patient, and that's what you trade thousands and thousands of times. And that's why I like trading, because it is mechanical. It doesn't have to be more complicated than trading probabilities, having good risk management, and then letting the numbers fall where they may. Never lose more than what you're willing to put into the trade. Try to go after favorable reward to risk, or go after super high probabilities. I've shared this concept with a lot of traders over the years, and it looks something like this. And then I'll let you have it back here, Brandon. So there's basically 4 quadrants in trading. Okay. So we have this. This will be our quadrants. And on the bottom, we're going to say that our bottom is going to be our risk to reward. Okay. So this is going to be we'll say reward to risk. So reward to risk on the bottom. And this is going to be high versus low. Okay. And then on the left-hand side, we're going to say win percentage. And it's going to be low to high. Everybody follow me? So if we have strategies that allow us to make money, there's actually 3 out of 4 quadrants that we make money in trading. If you are a trader that has a high win percentage, you don't necessarily have to have a high reward to risk. Traders make money here. Okay. That strategy that I showed wins 96% of the time, 97% of the time. Trades I see on a week-to-week basis, making 90+%. It makes money. Are the winners bigger than losers? No, the losers are actually usually 2, 3, 4, 5 times what the actual reward is. But you win enough. You do it over 100 trades, you do over 1,000 trades, you make money, right? So it works. Some traders love it because you trade with confidence. A high win percentage feels fantastic. Every time I take a trade, I want to win. That's the expectation. Also, make sure you manage your losses. Okay, how about this scenario? If I had a high reward to risk, but I didn't necessarily have a high win percentage, I can still make money. Think about this in trading currencies. Think about this in trading futures, trading stocks. If I said, okay, I'm going to take, $5,000 and buy Amazon. Okay. Now my $5,000 of risk capital would mean if Amazon went to 0, I'm risking $5,000. If I'm comfortable with that risk, Amazon's upside is unlimited. So does that $5,000 become 6, 7, 8, 10, 15, 20, 25? Sure. If you give it enough time. If right now Amazon at 190 goes up and becomes $1,000 stock, that's a 4.5 times or more, almost a 5 times earnings for what you're risking. You could take $5,000, turn it into $25,000 over the course of maybe the next 5 or 10 years if Amazon does continue to go up and build this moat and be this crazy logistical, behemoth out there. But your max risk would be $5,000. Your reward is unlimited. So therefore, look, if Amazon was 1 winner compared to 10 losers, as long as your winner is big, you can make up for all those losses. So that trader can make money too. Okay. Best place to be as a trader, and this is also difficult, but it's pretty fantastic when you can find this. That is where you kind of balance the two, and you can find a way to carve out a nice solid reward to risk, like a 2-to-1, and also have a high win percentage, like a 55, 65% win rate. You do that, do the numbers on that over 100 trades, over 1,000 trades. This is where traders make an absolute fortune. Is it that easy? No. In Forex trading, I do this with patterns. I do this with higher time frames. When it comes to futures trading or the markets, I'm doing this with call options. I'm looking for asymmetry where I've got lots and lots of upside. I have a defined risk that maybe it's $1,000 and my upside to be 3, 4, 5 times that. If I can win 50% of those trades, 55% of those trades, and also have good reward to risk, that's where I'm at. The only spot you can't be as a trader is right here. So if anything sticks tonight for this little summary, it's that, you're going to learn a ton over your career as a trader. You're going to learn a ton over your career as an investor. It doesn't have to be complicated, right? You can make money in a lot of different environments. You can make money, big picture. You can make money in a lot of different ventures. But the reality is you can't make money if your reward is small compared to your risk, and you can't make money if you never win trades. So if you find yourself in this situation where you're losing consistently, your win percentage is low and your reward to risk is low, mathematically, there's no chance of that trader making money. But the other 3 boxes, you can make money, right? So anyway, I had a lot of fun with that, and just kind of showed and validated and proved what I've been doing for the last 15 years of managing money, last 20 plus years of investing, which is I play the averages. This is what the market does most of the time. I've got this interesting slide right here as well. This is showing us that for the last 70 years, okay, we're talking about 73, 74 years of track record, up days in the market has been 53.7%. You nearly have a 4% edge by just being long in the market. I know that I've talked to Indy about this offline too. See if Indy wants to dabble in futures and get into some of the markets. If you're trading indices, if you're trading futures, if you're trading anything related to what our stock markets do in the US, 54% of that bias is an up bias. Yes, I know that the bears are crazy and they're volatile in 2022. We have scary days, and 2020 was a scary time, and 2008 was a scary time. But if all you do is plan around black swan events, there's a saying from Peter Lynch, and it says, most traders will lose money waiting for a correction rather than getting the actual correction. Most traders, when you hedge, you don't make money when you hedge. Okay. You protect yourself and you limit the drawdowns, and you limit the trouble you get into, but most of the time you don't make money when you hedge. It just lessens the damage and allows you to survive and still have some cash at the ready to buy things at a crazy discount. That's what 2020 was. 2020 was an instantaneous 30-day window for a 10-year discount in stocks. I bought everything I could get my hands on in 2020 and rode that all the way to 2021 and change. Easiest trading period I've ever had in my career. Maybe one of the best I'll ever have. But the reality was, when those opportunities present themselves, you certainly want to be ready. And that's where education experience goes a long ways. So anyway, that's a little macro stuff for me. But I wanted to talk about this week's holiday trading. It's going to be an interesting setup where we have FOMC minutes on Wednesday, no trading with the markets closed on Thursday, but we have some elections coming out, so forex could be pretty crazy this week. And then Friday, non-farm payroll for the U.S. Like I said, the market might do something like nobody's watching, and just be ready. Just be ready. Set some chart alarms. I'm going to be out of town myself Thursday, Friday, Saturday, Sunday, so I'm going to make sure that I'm protected. I don't have any crazy expirations on Friday, and we'll go from there. So. That's for me, Brandon. I see you just get this guy out of here.
No. And what I want to say is I really love when you are teaching. Yeah. Like that right there, the chart. We don't get a chance as traders to kind of understand where we fit in or what we should be looking at. So hopefully all those that see this can, really go back and review it and learn it. And then contact us if you have any questions.
Yep.
So thank you, buddy.
Sure.
All right, so guys, like we just had a heck of an education, and I teach basketball, and so it really is interesting because today I saw an amazing basketball game because I saw two players that I thought were really spectacular and have next level potentially NBA experience. They were high school kids, and so I could tell that they had subject matter mastery over some of the skill sets that they were applying over and over again against a very good team. But it was those two players. And so you could tell that they got a good education. And when they applied that education, it looked like knowledge. And there were college coaches from all over the country there to watch those guys. And at first, I didn't know who those coaches were watching, but it became abundantly clear because there's going to be mistakes that are made. But if you have more positive, like subject matter expertise, then you have mistakes trying to apply the subject matter expertise, then you're going to stand out. So again, we have a creed, and that creed is what? Become a subject matter expert. Number 2, become the best version of yourself. Number 3, surround yourself with people who inspire you. And if you do that, then you have a superb chance of being successful over time. Now, we all want to get immediate gratification and go from 0 to 60 instantly. Nobody wants the 2.4 seconds that it would take in some of these electric vehicles to get to that 60 miles an hour. But guess what? There are ways to do it. There are ways to really accelerate. And so sometimes you need either a little teamwork, or right now we're seeing that the AI experience and the bots and all the rest of the stuff may provide you with some opportunity. And so we all say that, we're not financial advisors, so we understand that, but we're just telling you what our journey is. So we have the Core Forex robot. And so the Core Forex bot is available for anybody to actually purchase. And so you can purchase it now, and it's going to get you roughly around maybe 300, 500 pips a month. So it's more of a set it and forget it, but there is going to be some early onboarding that you're going to have to learn, and we're going to be able to help you to do that. And for that, it is $1,500. So the normal price would be $5,000. The next thing that we have to offer is yield farming. And for those of you guys that remember, if you guys haven't been on in a while, we did do binary options. We felt that it was gambling with the strategy, but we've decided that that's something that we want to take away. We want to stop the gambling, get more to investing. And so that's why we're not doing it. So when Chris was talking about India, we're really super excited about, the new opportunities that we're going to bring in where it's investment strategies, pretty much only our business strategies. So with that said, we also have yield farming. Yield farming has been fantastic. It's very difficult. I mean, the market may be down, the market may be up, but as long as it's going in some type of volatility, you're going to have the opportunity to score and get some money. So without further ado, we're going to bring on Eric Majors, a good friend of mine, and Eric has been able to, really position himself as a leader. And remember, all of this, the team that we have on here, the design of all of this is so that you guys can get to know who these leaders are, because at the end of the day, you get scammed with people that you don't know. And so Chris and I and India and Sonia and James, we've been on every show, and Eric is now on just about every show. And it's so that you guys can get to know him. You guys can get to understand what he's doing, why he's doing it, how he's doing it. And so when you make a decision that you want to purchase this course, which is $650, normally $3,000, then there's a reason why you're getting it with Core 4 at a discount. The whole idea is that we all believe in self-custody. We want our members in our community to be able to win. And so sometimes winning means that you are going to have to pay for that education. So we do have Coinbase Trader. That's $3,500, right? And so that's just $3,500. We help you in there, but at the minimum, they're not willing to lower the price. So that's what it would cost. And so all of your money stays in Coinbase. And as it accumulates, then it's great, because you're going to be buying more tokens or coins or what have you. And then when it chooses to sell it, then you're making the profit. And so I've been in it now for a few months, and I'm getting about 5% a month. It's been fantastic. And so I can see when it's going down. I see how much money I have in it. There's not really too much that you can say negative about Coinbase Trader. There's not too much you can say negative about Core 4X Bot. And there's nothing you can say negative as well about yield farming. So without further ado, and the final two things that we'll talk about afterwards, we're going to mention to you guys what's going on with Miracle Cash and more, because we're going to integrate that a little bit as a business opportunity and a case study for us to take a look at. And so we have some wonderful people coming to join us. And then number two is we're going to be talking about the quantum bot called Kong, Kong. And so we are looking at that. We're evaluating that. And so we also are going to make it available to our community. So I'll talk briefly about that once I introduce you. You guys will talk to Eric for about 2 or 3 minutes, and let's see how we do. Hey, buddy.
Hey, again. How you doing? I just came from the beach, so my hair is a little messed up here. We're just driving back.
We can't tell.
But today is the last day of the month, and I was just literally going through my private client trading, and without a lot of work this month, we did 10% net to the client. So,
wow.
And that includes after all my fees and everything like that. So, I was only trading 2 positions the whole month. It was just basically Solana USDC and Michi coin, which really went down. So I bought a lot more of it. And, the yields on that are just incredible. You can get it anywhere from $300 a day. Sometimes it just happens to be low right now, but it's been a real winner. I mean, I've been doing like at least a 0.5% a day all month.
Wow.
On that coin. Yeah.
I mean, I think that it's interesting because right now Bitcoin is down a little bit, right? It's 60,000 somewhere in there.
Yeah.
And I think it had topped out at 70, and then everybody was talking about, the halving is going to make Bitcoin go crazy and over 100,000. It's such a good time to get into this because right now there hasn't been a lot of movement. And so if you start positioning yourself now and planning your acorns, you're going to see a lot of volatility happening within the next 3 to 6 months. And so what I tell people all the time is to be patient. Don't be disappointed that the halving didn't create this big, huge whatever. But if you start paying attention and learning about the different products that we're offering at Core 4, you're going to realize that typically when Bitcoin rises, the other coins are going to rise as well.
Yeah, I'm having a lot of success too over on Aerodrome. I usually just try to play the bigger ones, the Ethereum USDC pair. There's also a really good pair that I'm probably going to update my list this week on Solana network between the 2 major pairs of BTC and Ethereum, and I'm going to start playing that one. But the beauty of the trading in the pools is that you're not having to be there 24/7. So all day this weekend, I had a guest come and visit us, literally out of the blue. It was funny. We thought she was coming in the middle of next week. It's a friend of ours from South Africa, and she just called on Friday and said, "Oh, I'm going to be there. Looking forward to seeing you." What are you talking about? Actually, it was Thursday night. They were like, "Oh, okay." So we didn't have anything ready, but we just went and were able to rock the whole week. I mean, show her everything, take her out, eat everywhere. Didn't do a lick of trading, but just making money. The neat thing was over the weekend, didn't have to touch anything, just everything on autopilot, and just making a ton of money on the pools.
Well, and that's the goal. And so, for all those that are listening out here, what happens is you buy Eric's course, and what you'll learn is how to position what trading, yield farming is all about. And then, as you plug in with his course, you're going to be able to find out what he's trading and how he's doing. And, the mentoring is fantastic. So, Eric, thank you. Love it. Let's make more money.
All right. Blessings. Have a great night.
You too. All right, guys. So we've already started the chat about it. So what is Kongbot? What is Miracle Cash and More? Miracle Cash and More basically is a Phoenix token right now. And so a lot of the early adopters that got involved in it, they were able to actually buy an NFT. And the NFT was supposed to yield a certain value. As more and more stores opened up, it was more retail for crypto. So you could go in with cash, come out with crypto, go in with crypto, come out with cash. And so it's evolved into something that's much, much more. And so as I start to talk a little bit more about this and help you guys to understand it, the deal is that the Phoenix token is ranging between 10 cents and 20 cents, which is good, right? But it has great utility. And so you want to watch this utility. And I tell you guys this all the time. This is a case study. I'm not telling you to put your money in, but I'm telling you to learn off of this, because if you do, and then you decide that you either want to get involved with Miracle Cash and More or anything else, this is a tremendous opportunity, because they offer nodes. They have what's called the lever exchange. And so you can start to play around and, really not have the same fears that you would have in terms of a rug pull or just not knowing, right? So if the Phoenix token continues, they're supposed to be building a casino. They're supposed to be doing some amazing real estate where we would be able to buy things for a fraction of the cost. And so as they roll all of these different dynamics out, then the value of the Phoenix token is going to go up. So I'm telling you right now, it's at 20 cents. But let's say it hits $1. What if you were to just buy it open market on PancakeSwap, if you even know how to do that? And then that's great. But then what if you also want to do the notes and let it start making Phoenix tokens for you so that you don't have to actually purchase them? Lots of different ways that we can participate in this ecosystem of crypto and not be scammed the same way. So use the Boogie Gopher, the Miracle Cash and More as a gateway to learning more about crypto in terms of your education in this alternative financial space. And I think that you're going to find that you'll probably be very pleased with your opportunities. The next thing we're going to talk about is Kongbot. So we found out about Kongbot about maybe 3 or 4 months ago, and we really didn't believe it, right? And so it has and then we're going to have Brandon on or David on to really talk a little bit more about it and, share more about what it is. Now, I call it the beast, but the reality is it's called the Quantum Bot Kong. And so if you want to buy it, it's $12,000 to buy the bot if you right now go to the Quantum website. But if you get it through Core 4, you're going to get the discounts that we've talked about. It also costs about $199 a month to have it. So this is a lot of money for you to put out without even putting a first investment dollar into it. And that's true. And so that was kind of a pushback from me to say, hey, the community of Core 4 really can't afford that. Or if they could, they've been, looking for opportunities. And then I kind of paused and I said that, all of the products that we offer here, whether it be the Coinbase Trader, whether it be Core 4X, whatever it is, yield farming, this is education. And so you have to kind of get in where you fit in. And there's enough money made on each different level that if you do have something that costs you 12,000 minus whatever the discount is that you're getting with us, that you actually can still achieve some amazing results in your life, right? So just understand, get in where you fit in, right? Now, when I say don't be lazy about planning to be rich, what's interesting is that the Kong bot, over the course of the last like 468 days, they put it on something called FX Blue, which is similar to my FX book. And it's basically a tool that's third party that follows and tracks your trading. And so this bot has been able to, with a $12,000 investment, basically get over 1,000% return in the last 468 days. And I said that exactly right. Over 1,000, actually like 1,100% return. So basically it's at about 160,000 in the account from 12,000. Now, what does that really mean? Is it compounded? You can compound, but in this case, it was not compounded. So they extracted basically all the profit. It was separated. They left it in there so you guys can see the total value of the account, or we could see the total value of the account. But it's only trading off of the 12,000, which was the initial original deposit. So what does that actually mean? That means that every month it's getting between $3,000 and $16,000 on the $12,000 investment. Last year was more profitable and the bot was really super successful, more than it was this year. And this year it's still getting a minimum of $3,000 to $16,000 a month. That's about 25 to 125% monthly is what it ends up getting. And you'll be able to see all of that in FX Blue. And also they were just telling me that if they did not choose the way of no compounding and they chose to compound, then it would be probably almost 3 times, what's currently in the account. And that's, like I said, 150 some $1,000. So what am I telling you guys this for? This is a goal. And I am setting up, which I don't have to, but I have, funded the account so that you guys can see my journey. But with regards to funding my account, I've also will give you guys access to be able to watch the bot that they're having, like the $12,000 bot. And that's on the conservative level. So they also have a moderate and they also have an aggressive. So you get to choose where you want to be. So for all of those that have been asking me about it, I told you I would just kind of think about it and where it is. But, after the 12,000, you'd want to put in at least 10, maybe 15,000. So you'd be roughly around 25,000 that you would, be ready to deploy to make this work for you. So you'd pay the 12 minus whatever the discount is from Core 4. And then you would also fund the account. And the account is funded in what? In a self-custody broker. So that's exactly what fits into the Core 4 mantra. And then finally, what I want you guys to understand is that in 1 year, maybe the bot is doing amazing. Let's say the bot doesn't do what it did last year, but let's say the money that I have in grows 4 times. I'm just giving a rough example. Then you have to make a decision for you if this is something that you want to try as one of your financial strategies. So again, we have the Core Forex bot, it's $1,500. We have the yield farming. Right now it's $650. We have the Coinbase Trader, which is $34.99. And then finally we have Quantum Bots, which is the Kong bot, which is $11,999. So I'm telling you all this, minus the discount, which, they're going to run specials for Core 4 periodically. So just ask about it, learn about it. As we dive deeper into it, then you dive deeper into it. All right. So listen, I don't want to take any more of your time. You guys have been absolutely amazing. I appreciate the journey with you, and thank you, and good night.